Hello and welcome to the Money Show. I'm Kavita Thapliyal and it's your favorite segment, Meet Your Fund Manager. And today I have with me the very interesting Harsha Upadhyaya, CIO, Equity, Kotak AMC. Harsha, welcome to the Money Show. And today we are going to talk about Kotak Nasdaq 100 Fund of Fund. But before I get into the nitty-gritties of this fund, I really want to understand how are you looking at the market, because that is one question that everyone has on their mind, specifically after the IMD predictions on monsoon and the kind of a good data that we saw coming. We've started September series on a very good note. So there are mixed vibes as far as the coming quarters are concerned, but your understanding and your view is very important. Your view for maybe next 2 quarters, what are you seeing unfolding very different in the Indian market right now?
Kavita, as far as Indian markets are concerned, they have remained quite resilient over the past several quarters. We have seen Indian markets behaving quite differently than global markets in terms of the strength, I mean, and that continues. We have also seen significant inflows into our equities, both from domestic investors as well as from foreign investors. That's also playing its part in terms of keeping the markets on a strong foothold. As far as earnings are concerned, the last couple of earnings seasons have gone well. There may not have been a very strong upgrade cycle yet, but clearly overall earnings have been better than expectations. So we continue to believe that earnings season going forward as well will remain quite healthy. So given the fact that there are no big macro challenges and also the fact that earnings are moving reasonably well, we should expect markets to remain fairly healthy. Having said that, the two red flags in our view at this point of time, one is obviously the valuation risk that everybody is concerned about in pockets of our market, not everywhere, but definitely in the broader end of our market where money has also chased this momentum. One needs to remain cautious about the valuation risk. The second is the inflation risk. While it had moderated quite a bit, I think given the fact that monsoon has not gone well in the month of August and also on a cumulative basis. And also we have seen crude oil moving up from nearly $70 to a barrel to almost $90 to a barrel. We need to keep an eye on how inflation moves in the next few months. So these are some of the red flags, but otherwise our markets remain quite healthy at this point.
Mm-hmm. Any concern from the US market that you might see trickling on ours as well?
See, clearly we are in a connected world. So to that extent, any growth concerns in US or any concerns on the interest rate cycle there could have an impact every now and then. But clearly Indian growth rates have been quite resilient. We have performed much better than many other economies, including US economy. And also our monetary policies were not same as US or some of the other developed nations followed, because of which they seem to be in a bigger trouble in terms of containing inflation at this point of time. So I would say yes, from time to time you could have some impact from other markets, but clearly as long as our growth rates are fine, I think once the dust settles, our market should behave better.
Right. Harsha, talking about two very important events. Now, first the festive season and also the state elections coming up. Now, looking at the quarter results that were released, going ahead and the way monsoon is also unfolding, do you think consumption and sectors related to this entire period would have major concerns? How are you looking at these two events and the market's impact?
See, clearly, if you look at our portfolios today, we were not so overweight on the consumption basket because of two reasons. One, because of the valuation risk in the sector, and second, because of the concerns on the rural economy, which had not kind of normalized post-COVID, and it was taking more time compared to urban consumption trends. So to that extent, those risks are still there in the market, and especially, as you rightly said, since the month of August, we have not seen great rainfall across the country. We could see further impact on the rural consumption trends even going forward. So one needs to watch that out. Usually, the last 4 or 5 weeks of the monsoon are also very crucial. I think we are in that critical juncture at this point of time. And generally, whenever monsoon is deficient by more than 6% compared to the normal, then you have impact on inflation to some extent, and also some impact on the rural consumption trends. We are currently running at about 10 to 11% deficient. So we need to see whether next 4 5 weeks the rainy season will pick up and whether the deficiency will reduce or not. I think that will be very crucial for the consumption trends. So to that extent, I think consumption stocks are not an outright buy at this point of time. One needs to see what happens on the rainy season.
Mid cap and small cap, do you think the run-up is now overvalued, and also the change in strategy for large caps now?
Clearly, large cap valuations are still more comfortable as compared to small caps in our view. Almost all of the segments are showing valuation trends which are slightly higher than comfort levels, and more so in mid and small caps. And also, in case of worries on the inflation or on the interest rate trajectory, could impact mid and small caps more from an earnings perspective. So, to that extent, I think we need to be a little more careful in that basket as compared to large caps.
The kind of sectors that you think the valuations are decent, and we might see the exposure going up in your portfolio across funds?
Kavita, clearly there are no pockets of undervaluation in the market at this point of time, at least to our mind. So to that extent, it will be more of bottom-up stock picking. There are no sectors which are uniformly undervalued or fairly valued in our opinion. So we will have to keep looking for downside volatility for whatever reasons that comes in the markets. And if we are not caught up by the fundamentals of those particular businesses, then those will be good times to accumulate. But otherwise, I think almost all sectors are either fairly valued or richly valued at this point of time.
All right, let's shift our focus to a specific fund that we are talking about, and let's talk about the US market in depth, because Kotak Nasdaq 100 Fund of Fund is the fund that we are going to cover now with you. So what's the status right now? Can people invest money via this fund? Because I believe there has been, the restrictions are still on, but what about the limits?
Currently, limit is open to a small extent. So there is a limit of $300 million that we can take in this particular route. And whenever we hit that limit, and if there are no further limits available, then we'll have to close the fund for subscription. But currently, since we have seen some redemptions in the recent times, there is a bit of a window that is available for new investors if they are keen to take Nasdaq exposure at this point.
All right. Let's talk about the specific that an investor needs to know, because this kind of a fund in your portfolio should be placed only when you are looking at a diversification in a particular sector, in a particular geography, right, Harsha? So what are the things an investor needs to know before you diversify your portfolio for this?
Absolutely, Kavita. Whatever you said is 100% correct. This should be looked at only from a view of diversification, and as it's a thematic product, the proportion should also be much lower compared to your overall investments. And the reason to look at this is some of these companies which are part of Nasdaq index, for example, are not available for investments in any other format in India. For example, there are no proxy ways of investing into some of these companies. These are all very high technology, innovative companies, and over the cycles, we have seen that these companies have really grow, and they just don't operate in US, for example. They operate mostly across the globe and have very significant business runway for growth. So to that extent, if anybody is looking to invest in any of these stocks, this is the simplest way to take that exposure, because you will be taking a passive exposure to Nasdaq, and also you need not worry about foreign currency exchanges, etc. You can invest in rupee account. It's a rupee fund, and the money gets converted into dollar and gets invested into the entire basket of Nasdaq stocks. And whenever you redeem, depending on whatever is the foreign currency exchange rate, you will get the money back in again rupee. So to that extent, not only this gives you exposure to US markets to Nasdaq, but also gives you a hedge against rupee depreciation against US dollars. So that's another additional point that is significant from an investor perspective.
Could you give us the index breakdown right now that Nasdaq 100 has?
Again, most of these stocks have significant operations, not just in US, but across the globe. So I would say generally these are high technology companies, innovative companies, which have been operating in US as well as outside US. And the index composition also keeps changing based on the market movements of all these stocks on a relative basis as well. But for an investor, retail investor, it's better to look at Nasdaq and see where the Nasdaq is moving. Since it's a passive fund, that gives a close understanding in terms of how the fund is likely to behave.
So Harsha, what's the difference between having good amount of exposure in tech in the Indian market and having a good amount of high performance tech companies in Nasdaq 100? What's the difference? What are the sector exposure risk which might get involved?
See, clearly, when you look at Indian IT services sector, it's as the name suggests, it's IT services rather than IT products or high technology innovation-led companies. As far as Nasdaq is concerned, it has companies across the spectrum of technology, and also not only just operating in US or one or two markets, but across the globe. So that's the significant difference between your IT exposure in the domestic market vis-a-vis the Nasdaq exposure. That's point number one. Second is because these segments are looking at higher growth than IT services, and also there is a scarcity premium. Some of these stocks may be quoting at a valuation which are much higher than IT services. So both growth rates as well as valuations could be very different than what you see in the Indian market. And one should not take Indian IT sector as a benchmark or think that a proxy for Indian IT sector. It's completely a different exposure. It also is in a different currency in that sense. So it's going to behave very differently than our IT sector at many points of time. For example, last 1 year, while our IT sector has not done that well, the Nasdaq per se has done quite well, and it's done much better than overall Indian market as well. So there will be periods of outperformance, underperformance compared to Indian markets or Indian IT sector. And that's the reason for diversification rather than just looking at point to point.
So exactly. So the question over here is, what is the reason behind Nasdaq performing so well despite their own economic concerns in the US? What's the reason and the road ahead that you see for the US economy and the impact on Nasdaq?
See, using usage of technology or embracing technology is not going to stop because there is a down cycle in the economy. And especially these are the companies where they are also into some of the areas which cannot be kind of shut down because your profitability is lower or your outlook is not so great on the economy. Unless you are investing in just a pocket of, let's say, IT services, where the business is derived from companies making investments into IT services, which could also see ups and downs depending on the outlook for the economy. The Nasdaq companies are so different. There could be continuous opportunities for them to grow. And secondly, they are not just wedded to one particular market or one geography. They have operations across the globe in many cases and have significant market shares in countries or economies other than just the US. So these are some of the reasons for it to behave differently. And also the starting point also makes a difference, right? There was a point of time after 2021 where Nasdaq had fallen more than Indian IT sector, for example. So from that perspective also, the valuations had corrected to more meaningful, had seen meaningful correction. So from there on, we have seen a stronger pullback in those names as compared to Indian IT sector.
Harsha, one very basic and a very important question. Now, when an investor wants to have a sector exposure like this, it's very important for them to play it very smart. Okay, having exposure in Nasdaq 100 fund and also having the similar exposure in Indian companies via a flexi cap, multi cap, and a large cap. How do you avoid the case of over diversification?
See, only very few flexi-cap funds would have exposure to international stocks, and not all of them would have taken exposure to the Nasdaq heavyweights or all of the Nasdaq stocks.
Indian exposure in IT companies, not necessarily the international exposure, the Indian exposure in IT.
Yeah. Kavita, as I mentioned earlier, yeah. Indian IT sector, the growth rates, the valuations, the outlook, everything is very different as compared to Nasdaq basket. So to that extent, one need not worry about having both of them in the portfolio.
Okay. So there can't be any case of over diversification. I mean, you just need to restrict your exposure maybe to an international market. That is something that needs to be taken care of.
That's all. That's all.
Okay. So on a guideline basis, what should be your international market exposure in a portfolio? A lot depends on your financial goals and your risk appetite and how much place do you have in your portfolio. But as a thumb rule, what's recommended?
Kavita, as you rightly said, there is no one size that fits all. However, we do say that the thematic exposure, whether it is international or domestic, individual sectors or multi-sector funds, it should not be more than, say, 10% of one's overall portfolio. So I think that the thumb rule should work for most investors, but obviously it will be better for each investor to find what is appropriate by having a discussion with a financial expert.
Right. One last question. So in this fund, one can invest via SIP or lump sum. Both way of investments are allowed and open right now.
Yes, currently both routes are available and one can look at investing.
All right, that will be all. Thank you so much, Harsha, for being on the show and helping our viewers with not only diversifying their portfolio to international market, but also about Kotak Nasdaq 100 Fund of Fund. Thank you so much.
Thank you.